And now it's time for our weekly energy update with Dan McTeague. Over to you, Dan.
Thank you for that, David. It looks like we're going to see an interesting week ahead. All eyes are focused not so much on whether there's going to be any moratoriums on U.S. and other central bankers around the world, uh, you know, holding off on interest rate increases. But now, of course, a concern raised about what OPEC is about to do. It postponed its meeting tomorrow in favor of trying to what appears to be smooth out some differences between some OPEC members. It sounds like Saudi Arabia, or at least led by Saudi Arabia, several countries want to, within that organization, continue the production cut of 3 million barrels between all members. They may be, and it looks like they're having some trouble with Iran, who wants to sell a lot of oil to prop up their economy. Now they've been given several $billions from the Biden administration on the belief that that money would somehow help bring about some changes to its nuclear ambitions. The world, of course, would be a very scary place if Iran ever wound up with those kind of weapons. But that aside, that appears to be why there is a bit of a pause on the meeting on OPEC, which was decidedly in favor of continuing well beyond December the production cuts. What that means is that we may have to take a bit of a wait and see approach, but ultimately it looks like production cuts are here to stay. And no matter what the United States and others do to try to fill the gap, and no matter what the discussion is about demand falling in the new year because of global recessions or high energy prices, the reality is that sooner or later, the gap of about 2 million barrels a day shortfall has to be paid somehow, some way. Now, we're of course looking at this time of year, David, where energy prices are more influenced, not so much on the gasoline side, but on the diesel and home heating, the fuel oil side, mostly because we're heading into what appears to be a slightly colder, earlier winter, not just in North America, but most notably in Northern Europe. So that could be and spell quite a bit of upward pressure on diesel prices next week. I would expect that that might actually reflect an overall increase total going into this time next week of about 4 cents a liter average. For gasoline, I'm not expecting much unless we see oil break out as a result of what happens with OPEC. So much remains to be seen. But suffice it to say that, if you're going across the country today, you're paying $1.60 in Atlantic Canada for gasoline. You could see prices maybe up or down a penny. In Quebec, the same would apply. So you're paying currently right now in places like Montreal about $1.62 for a liter. Look for that maybe to drop 2 cents a liter towards the $1.59 range. Ontario, which has a slightly less tax, you're in the $1.50 range. Look for that probably to drop a penny tomorrow, Saturday, and then another penny likely by Sunday. Of course, it is the Thanksgiving weekend in the U.S., so markets are really only behaving at half speed for half the day today. So we may not get a real correction or understanding of the full weight of the markets until Wednesday of next week. That's why this weekend will probably remain relatively calm right until Tuesday. So for Manitoba, which may very well very soon be dropping part of its provincial taxes on gasoline, the $1.50 that you're seeing, $1.49, could actually drop if it's understood that it's going to be a 4-cent decrease down to an average of $1.45 as soon as the new government there is able to pass that legislation. Saskatchewan, retailers are really taking a beating. Gasoline down to $1.39 in Saskatoon, $1.42 in Regina. Look for those prices to hold. Ditto for Alberta, for Calgary, and for Edmonton, that are in the $1.26 range all the way to $1.34. The only difference there between is being really retail margins. BC Interior, again, no move. $1.60 in places like Prince George, $1.65 to $1.68 in Kamloops and Kelowna. So we really have to look at what's happening in Vancouver. Prices there in the $1.76, $1.77 range, likely to remain up or down 3 cents a liter throughout the week, especially at the end of the week. And of course, Vancouver Island, Victoria, prices remain extraordinarily sticky there. It's been $1.79 for about a month, and it's likely to stay there by the looks of it for yet another month. Having said all this, it's important to put things in perspective with respects to gas prices right now. In the new year, with the opening of the Trans Mountain pipeline expansion, we could start to see a stronger Canadian dollar, and of course, a much better price for Canadian Standard of Oil, Western Canadian Select. Until that happens, looks like smooth sailing for now. Nothing really to write home about, but all eyes have to be focused on what OPEC does over the next week. That's it for today, David. We'll talk to you next week.